Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on Monday, December 21st, 2020 with a Forex Trading Unlocked weekly market analysis for you. And before we get into it, we just want to remind you with our disclaimer that this webinar is for illustrative and educational purposes only. And with that, we're going to also pull up our quick plug to remind you to subscribe to our YouTube channel, Forex Trading Unlocked, and also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And watch out, we'll be running a post-holiday little event for a week where you can download it for free if you're an Amazon Prime member, and check it out. All right, with that being said, we have the Forex-Trading-Unlocked.com website pull up. And we're going to scoot down. We're on the workstation page. We have the Euro US dollar chart already pulled up. Real quick, let's look at the hourly. As you can see, the market gapped to the downside and hit support pretty hard. It got all the way down to $1.2129 before finding support and bouncing. And as you can see now, it's pretty much only slightly lower on the day for this the range that it's had so far since it opened last night. And it is hovering just below this key support level on the hourly. We had a sell signal that was triggered last week back up here, and it was a nice little trade that followed through today, and now it's done. We're waiting for the next signal. So right now we have the market in an hourly little upswing over the past few hours. However, it is only a corrective move. As you can see, this market spiked lower with a nice gap here. And also, if you look at it, as far as we came off this higher move high, we may have tagged a higher move low already today and set the bottom for the week. We're coming right into this upward sloping support line. It's a pretty steep slope, but it's not that vertical, and especially over the next couple days as we head into the holiday and Brexit. Remember, that is coming up on the 31st. So we have this little timeline where you can expect it to pretty much go sideways, but we're going to key off this $21.80 pivot right here for upside and downward direction. A failure from $20.60, this would be the significant level. One, because it would be making a lower move low, which would take us off the short-term bullish forecast. Even though long-term and medium-term we are definitely bullish, we're looking for a short-term correction. We may have already seen it over between Friday's trade going into the early morning trade. Especially if you look at the symmetry from this high to this low, it matches this last swing high to this last low pretty much. So we're going to watch and key off to the movement from today. I think that most of today's trading is pretty much done for the day as far as where you're going to see a lot of volume. The European markets are closed now. It's just the U.S. markets that are open for the remainder of the trading session. On the hourly, we do have a little gap to fill up here, but right now I think for the most part you're probably much done for the day. So these are the levels that we're keying off of. Any breach of the high up here that was set last week will keep this bullish momentum building as this market tries to break through the $1.23 area and push up towards $1.24. The overall trend is definitely bullish. We're right now, because of the hourly, we had the sell signal that was already come to fruition. We may have seen the extent of that correction. So right now we're waiting for either another trade setup on the hourly, which we do not have currently. The one thing about the hourly is we've made successive lower move lows and lower move highs. So this key support area at $22.25 is key. If you're an aggressive bear, this is probably where you want to sell against right now. Let's take a look at the British pound US dollar, which is also coming into the Brexit deadline. I'll put this right there. Now here's an interesting thing is we had a dark cloud cover sell signal that had occurred on Friday with the sell signal going right into the close. Boy, did that happen fast. Not only did we blow into our downside target area for the hourly trade and the short-term daily trade, it penetrated the extended downside target area already. You can see that the low came in here at around $1.3186, and we had that area as $1.3262 down to $1.3039 in this area here. This would have me believing that most likely, even though this isn't a bull trend in the intermediate and long term, short term, obviously because of the daily signal, In the hourly movement, it's in a short-term corrective bear pattern. This last swing low here at $1.3148 is propping up the market. It's also right by our $1.3262 downside target, extended target. So if the market can maintain the low that it planted today and trade sideways into Brexit, it will be a neutral to higher trade, most likely setting up for the rest of the year. We blew through our targets, so there's nothing left in this trade left, unless you want to really penetrate down towards this $1.3039, which it may still do. But however, on the daily, we've had quite a move, and I would say if you got in on this signal like we did, take the money and run. You've already hit this. We already had our downside target pegged in one here and also here at $1.3262. So we're out of this one. We're waiting to see what happens. Remember, it's a holiday week this week and next week. You have shortened trading sessions, shortened trading days. Volume's going to thin out. We're end of the quarter, end of the year. You have a lot of people that are taking off, a lot of traders. There's only going to be the algos trading for the most part, and a lot of people who are just bored, and that doesn't make for a good trading environment. So we've hit our downside targets here, so we're just going to have to wait for a signal now with the pound. We may be done for the week already. It's Monday, but when the holiday ends on a week, on a Friday, you know, you have a Thursday, Friday holiday coming into it. Everyone's going to be done by Wednesday, so which is pretty means that tomorrow is actually Thursday as far as most traders are concerned. US dollar Swiss got a nice little bounce today after it's been battering the dollar. But even that one is falling back again today. Right now, this thing is a bear. There's no even reason to even start to begin to try and catch a falling knife. Wait for a valid buy signal. The only thing that this market kind of has going for it is the fact that it took out this high right here today. So it made a lower move low and it made a higher move high on a daily basis. Does that mean that we're bullish? Absolutely not. Could we be setting up for a little pause? Yeah, that's very possible. So key off the low from last Thursday around 88.21. Between there and 89.11, expect a sideways chop. Brexit doesn't really interfere too much with the Swiss. This is just a matter of balancing. I think you're more likely to see this market go sideways than to see a rally. This downward sloping resistance here that's holding the trend in place probably will continue to do so. US dollar Japanese yen fell out of bed the other day, just like the dollar did with most other currencies. As you can see, Friday it stabilized, and today it had a nice little bounce too, and it's pretty much at unchanged on the day. This is the one currency where I think you're going to probably see the trend, no matter what, remaining to be weaker, meaning the yen is going to be stronger versus the dollar. If you look at the velocity of money, especially with the velocity of how it's been printed between the EU, most other nations, and the United States, Japan saw negative interest rates and already gone through all this stuff in the 90s. They have rebounded to some degree and have, gone sideways for the most part for decades. Their market is strong. It is resilient. And there's not much more that they can do. We know that as far as the yen policy, they're going to keep it pretty much the way it's been. They also are not propping up the debt markets like easing and printing of money. So that in itself, you see, first, especially with the euro, the pound, and the dollar, their value has decreased at a much higher rate over the past few years, and especially this year, than the yen has. So that's where I think you're going to see a lot of strength remain in the yen over the overall trend. Right now, we're looking for a short-term signal to either the downside or the upside, and there's nothing really happening here. It's holiday markets. I think that the yen's going to drift and be choppy, as you can see today's indecisive trade. There's really not much to be left on the table for now. We wait until this afternoon or this evening in the U.S. when the Asian markets come back online, and then you see a move back at that time. Right now, we have a short-term low that's in place. It's a lower move swing low, so we're looking for a lower swing high that somehow will come in around this 103.93, which it fell just short of today already. This may be it for as far as a correction. But if you look at the downward sloping resistance line here, we could get up to about a 104.27. I doubt 104.60 is going to happen. Should we get to above 104.60, that would take us off of the totally short run. It would have us in a bullish to neutral stance. Still intermediate and long term, we're a bear this market, but as we head into the end of the year, fourth quarter, you might see a little correction in dollar strength come into the market. So there's a lot of things that are going on globally, and as you have the balancing for year end, you may see a spike and all of a sudden dollar buying, and it will be more from liquidation than anything else. Now we have the Australian dollar, US dollar that took out this swing low. This was a key pivot area at 75.08. It bounced up through that, took out the upward sloping support that was holding up this trend. And now look at where it is. It's only slightly lower on the day, but there's a big gap between the close from Friday and this morning when they opened up, or Sunday night rather. We've had a lot of volatility also. Since Thursday, look at how the market has come back from 76.37 all the way down to 74.63. That's a big move considering there really isn't any major news going on in the currency environment and the financial environment. As we head into the holidays, I'd expect more swings like this. This is a bull. I mean, even though it took out this swing low here, overall, it's just coming off a major swing high. I would say you're more likely in a neutral to bullish posture still, no matter what. Short run on the hourly basis, maybe you're going to be on an hourly basis, you're still in a bearish trend, but I'd be very cautious being a bear at these levels, especially any violation of this high, or excuse me, any violation of this low from today, that would be huge in confirming a negative bias in the short run. The high from last Thursday, I think around 76.39, though, is your real key for direction. Only if we get above that would that confirm strength, definitely, as we head into the end of the year and we head into 2021. Can you believe that? New Zealand dollar, US dollar is acting pretty much the same as the Australian dollar. I would key off of the low set today as well as the high that was set last Thursday. Any breach of 71.71 would have us on the rally track for sure. Once again, the momentum to the upside is very extreme. I think that over the next couple of days and into the next 2 weeks, you're probably going to see more sideways chop than anything else. But use caution. If we take out the low from today, that is significant. That would mean that we have come off of a higher move high, made a higher move low, then a lower move high, and then a higher lower move low, meaning that we would target the 69.47 down to 68.77 area. We don't have any questions on the chat on Twitch or on YouTube right now, so we'll continue to go through our analysis here. So we have, let's see, we'll go now to the US dollar, Canadian dollar. So the US dollar, Canadian dollar, this is another market that has been just hammering the US dollar. Why is this not, that's odd. All right, US dollar, Canadian dollar. Okay, this should work. Okay, so this market had breached this downward sloping resistance nicely today. It kind of was looking to try and set a bottom last week in front of some of these other currencies and has had some nice upside momentum. You can see that it had already pegged our $1.2953 first upside target level. We were looking for this to maybe get touched over the next week and a half to 2 weeks. We didn't even remotely think that it would explode to the upside for a Monday trade. I would be, like I said, use caution as we head into these holiday trading hours for the next 2 weeks. These sessions will be rough. They will be thin in volume, and I would expect some erratic moves, mostly generated by the algos. So pick your points wisely. Right now, we have the US dollar Canada in a short-term bullish correction. We may have hit the top today already. These are the key levels: $1.2953, $1.3034, and $1.3175. You would have to get above the $1.3175 up in this area to really confirm any real big bottoming issue with the US dollar Canada. And right now with the war on the dollar, I think we're more in just an upside correction, year-end little spike where you're going to probably see a little head fake with dollar strength as we end and wind out our holiday season in our 2020. Let's look at the US dollar Mexican peso real quick. We had a request for that one because there's always people thinking and talking about going to Mexico. Interestingly enough, we bottomed here in the beginning of December, and we had made a lower move low, higher move low, higher move, or excuse me, higher lower move or higher move high after a lower move low. Then we made a higher move low, and today we made a higher move high. This is very bearish now, I would say. Interim, as we head into the final part of this year, the next 2 weeks, expect a violent, sloppy, choppy trade somewhere between this 1974 pesos and 20.25 pesos per the dollar. I don't think you're going to see a big rally. I don't think you're going to see a severe slide either. I would say that you're most likely going to see this just pretty much stabilize, especially because you're starting to see a lot of bookings for travel to Mexico, which means you're probably seeing a lot of people that are starting to buy pesos and sell dollars, so as they get ready for their trips. And now let's go back to the Euro US dollar real quick and see where we're at, since we're making our wraparound on this webinar today. So this one here, we started out with the hourly chart. As you can see, we're still bobbling below this key support and resistance level here at $1.2225. I think this market probably has run out of gas for the day. I wouldn't expect very much more, but we'll see. You never know what happens. If there's a violent sell-off and this market does sell off and settle between or under $1.2180 today, that would be a very good indication that the bearish momentum will continue into the rest of the week, and maybe we'll see the slide come down and challenge this $1.2060 level of support here, which if that fails here, that would confirm newer move lows after a higher move high, putting this market in short-term neutral, which we're expecting it to be for the next 2 weeks anyhow, and settle into that. However, trading below $1.2060 will have us leaning on $1.2015 very quickly, I think. Anything below here, then I would say you're going to see bearish momentum build even further as it presses a break down to $1.1938, even $1.1857. Remember, this market bounced off $1.16 and rallied to $1.2275 in a heartbeat, and that was more of a range than it had for a year and a half prior to this year to begin with. And not to mention the fact that we were at $1.06 just a few months ago, 6 months ago. So that's a big rally that we're coming off the top. We're topping off of right now on an annual basis, on a monthly basis, weekly basis, daily basis, you name it. Am I trying to call a top here? Absolutely not, but I would use caution as we buffer resistance here and the dollar continues to get hammered. And then one last thing before we end this video, don't forget to check us out on Forex Trading Unlocked on YouTube. Subscribe to it so you know when our videos are coming out. And then also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com and paperback in Kindle versions. Thank you very much. You have a great day, and remember to check us out every day at